All right, guys, bang, bang. I've got Andy here with me, who is in Phoenix right now. Thanks for doing this, man.
Thanks for having me.
Yeah, for sure. This is your second time coming on the podcast, so we'll skip over all the background. Maybe just give us kind of an overview of CoinList today and an update as to like where you guys are since the last time we talked.
Yeah, I know that was quite a while ago, and CoinList has changed quite a bit. Back then, our business was run token sales for the top crypto projects, and that remains the core of the business today. So starting with our first one back in 2017, Filecoin, we've done a whole bunch since, Blockstack, Algorand, Nervos, and many others. Most recently, Solana ran their auction last week, which was very successful. We can talk about that a little bit, and we've got some others coming up, including Cello. So that's still our core business. Since then, we've added a bunch of other business lines. And the biggest one coming up now is the CoinList Trade Exchange. There's trade liquids, primarily those that we've ran sales for, but also other crypto assets. And we've turned that on and are starting to roll that out more aggressively. So, from here forward, CoinList will be doing token sales, but also letting people trade crypto assets liquidly on the CoinList exchange. That's what we're focused on.
Got it. And so with that exchange, is the whole thought process that basically there will be any asset that can exchange be exchanged there? So like more of a competitor to like the Coinbase's, Binance's, Gemini's of the world, or are these very specific types of crypto assets that'll be traded?
Yeah, so we will list those large cap ones like the Bitcoin, Ethereum, because people want to trade those, and if they're on our platform, we might as well let them. But the focus for us is going to be much more on the assets that we ran sales for. So think about a Filecoin or a Solana or a Cello coming up. And the reason for that is actually really compelling. When you participate in a token sale before the token's liquid, which is how these sales on CoinList happen, at some point the token goes live. And it's typically this really messy process where you're going to get your tokens. So you sent $1,000 to some crypto project, and then a year later, the project goes live and you have to generate a wallet. They reach out to you, they collect the wallet address, they send you the tokens to that wallet. It's really messy. It's a lot of copying and pasting of wallet addresses, which is scary for people to do, and rightfully so. And so what we've developed instead is a really seamless process where when you participate in one of these great projects on CoinList, then one day you just get an email that says, hey, your tokens are ready. If you want, we'll just drop them into your CoinList wallet. And so you can just say, okay. And then one day you'll get an email that says, hey, your 100 Filecoin tokens are now in your CoinList account. Just log in with the same username and password you used when you bought them. And so there's no distribution process there. And then the natural next step from that is to say, and if you want to buy more or you want to sell the token you bought, just hit the button right here. You're already on the CoinList platform. Your tokens are already here. No need to move them around, just transact. And so our focus is going to be on trading for those assets where, because we ran the sale, all the users really easily have the tokens right there already, and we can let them transact seamlessly instead of dealing with the token distribution process.
Gotcha. And then what type of investors are you seeing either participating in the initial token sales, or do you think you'll see on the exchange? Are these more traditional funds, or the individuals, family offices? Like, what are you seeing there?
Yeah, it's hard to characterize because it's such a broad range. So a typical token sale will have hundreds or maybe over 1,000 purchasers, people buying into the sale. And those range from a larger number of small dollar investors. Those small dollar investors could be random crypto fans anywhere over the world, or someone who works in technology and invests a little bit, or works in the space and invests a little bit. And then you start stepping up and you see crypto funds or crypto specific funds investing in these token sales. And then you step up even higher in terms of dollar amounts and you see large venture funds, traditional hedge funds, family offices, endowments. So you get this whole spectrum, and unsurprisingly, it's a larger number of smaller dollar investors, and then a small number of really large investors, and that's what ends up coming together to make a token sale successful. Because for most of these projects, they have a dual goal with their token sale. One, bring capital in to fund the development of the project, but two, distribute their token really broadly to a wide array of stakeholders. And so you want to hit both of those goals and get both sides of that distribution.
Got it. That makes a lot of sense. And then in terms of where those investors are located, are these mostly US based? Or are you still seeing a lot of activity from Asia, or kind of a good mix?
Total mix, yeah. So and again, it's hard to characterize because it depends so much on the community of that individual project. Say that it varies from 70-30 US non-US to 30-70 US non-US. So, we've got a natural user base in the United States by virtue of being an American company, but we have tons of users from outside the US, and in some sales that actually outweighs it. In fact, for some of the sales that we run, US users are not even allowed to participate. So in those ones, obviously it's 100% ex-US, but when they are, it varies between 70-30 each direction. And for the non-US participants, I would say it's mostly Asia, and a pretty even split between kind of Southeast Asia and Eastern Asia, and then a bunch of European investors, and then others scattered around the world.
Got it. That makes sense. And I guess one of the things that I've been spending a lot of time thinking through. You're running one of these companies, and then obviously talk with a lot of other founders. Is this idea that like crypto companies are pandemic proof? And this speaks to one, the way that they work, right? So kind of a lot of remote work, the way that they communicate, they're based on a global basis. So they're kind of used to time zone differences and things like that. But then also in times of global instability, there tends to be a lot more activity and interest in crypto and kind of digital assets in general. And so those companies are benefiting from the uncertainty as well. Or, one, are you seeing that? And two, maybe elaborate a little bit on kind of like how you view the idea of like pandemic proof companies?
Yeah, I am absolutely seeing that. And I would actually take it a step further and think about it first from almost a philosophical lens, that people building crypto companies, working in crypto companies, supporting this crypto movement are proponents of decentralization. I mean, that's what this is all about here. And you can talk about that in very practical terms, but I actually think it starts with epiphany that people have when they start to get interested in this space, which is the value of decentralization. Decentralization is a paradigm for everything, that perhaps some systems can be more effective when they are decentralized, when they're distributed, when they work by encouraging collaboration of a disparate set of entities instead of mandating it from a central authority. And so I think a lot of people in crypto, that switch has flipped, and they've said, I am pro-decentralization. I believe in the power of a decentralized set of incentives to drive great performance. We've seen that with Bitcoin, we've seen that with other crypto assets. And so that then becomes a mentality. And what that then leads to is all these practical effects. These effects like being really comfortable with remote work or a partially remote team, being really comfortable with instability happening in certain parts of a sector and not letting that disturb the whole balance of it. And so I think it starts with that mentality, but then absolutely on a practical level, a lot of crypto teams are distributed, even if your team itself is not distributed. So CoinList is typically based between San Francisco and New York. We've got offices in both places. Everyone we work with is all over the world. We work with issuers and investors that are all over the entire globe. And so we're used to working in a decentralized way. Even if our team is in one place or two places, we have calls at odd hours with people in every different time zone. We're used to that paradigm. And so that certainly is true. And then I would agree. I think a lot of the benefit, and we can talk more about this too, a lot of the benefit that we've been pitched for crypto and that we pitch for crypto is benefits in time of instability, that it can function as this transnational, safe from issues in any single place, sort of asset base and technology. And so I think that the people that are in crypto, the users, the investors, community members, prepared for these times of instability, and in fact see it as an opportunity and a chance to really demonstrate what crypto is good for. So it does feel like both crypto companies on a very practical level are pandemic proof or pandemic resistant, but also the industry as a whole and what we're working on feels pandemic resistant as well.
Yeah. Has anything changed for you guys and how you're actually kind of operating internally? Anything you guys have done differently because of this?
Obviously the team's gone remote and people are working from home, and we've built some processes to support that and making sure that people are comfortable and productive and also happy, which is, I think, a really underrated point for a lot of people. Everyone thinks once you're remote, how do you make sure that everyone's still communicating and productive and getting everything done and making sure they have the tools to do that, which is undoubtedly important. But there's a second piece too that, you know, it's for us, that we really enjoy being in the office. And when you don't have that, it can be hard. And so, you know, how do you make sure that everyone feels really good and is happy and is talking to everyone just even socially and encouraging that? So we've built some stuff around that and are working on that. But in terms of our planning from a business perspective, it stayed pretty much on track. I mean, we ran the Solana auction, you know, last week, and it was great, and people participated, and it sold out, and it was a really successful offering in the pits of all this craziness.
Mm-hmm.
You know, we've got the Cello auction coming up, and it's still on track. We're, you know, launching more and more features, the exchange, and for us, it's just a matter of marching forward again, because you know, we're not working in the hospitality space, and if we were, we would be changing our plans. And I, you know, feel awful for friends who have had to do so in a space like that. But again, for crypto, if it is resistant at some level, let's keep marching forward and try and use this as an opportunity to grow.
Yeah, it's really interesting, kind of this balance. I feel like it's become cool to have the work from home and kind of remote culture. And there's a lot of benefits for it, obviously. But there is still this element of the social component of going into the office, the camaraderie, the kind of human interaction. And I know there's a lot of companies that are trying to figure out, like, how do you build some of that into products or allow for the serendipity of an office and things like that. But I do hear a lot of founders saying it's like we have the capabilities of doing remote work or work from home if people choose to do that. But we also see the benefit of kind of everyone coming together. And it sounds like you're kind of like right down the fairway on balancing those two things.
Yeah, it's, you know, and I think you can build a great company in any direction. There's lots of evidence with that, but part of it is just the team that you end up building, the people that are working together, and for us, that social interaction is important and helps people stay fired up and focused on the work at hand and well aligned with each other. And so yeah, we've had to figure out how to work with that. I mean, we've been doing these virtual happy hours where everyone gets on Zoom and hangs out with each other. Actually, this week we realized we should really make it a happy hour, so we sent everyone on the team a little bit of money to go out and buy a drink of choice and you know, sit there all together on this happy hour. And so it's just those little things that I think can make a little bit of a difference and get everyone excited about, you know, being together even in some more limited virtual way.
I love that. What any update as to what people went and bought?
We'll find out early next week. We just those dollars just went out, so we'll find out. Everyone's keeping a surprise until we get on the call together. I'm sure there'll be some show and tell.
You're a brave man. I don't know whether to be fearful of what people are going to buy or excited. So
we've got some good folks on the team.
Yeah. So you are normally based in San Francisco, and then you're in Phoenix now. Maybe give us an update just on, like, what are you seeing actually on the ground in those two cities around coronavirus and kind of the reaction and maybe how it's affecting businesses in both those areas.
Yeah. So it was interesting. I was actually in New York most recently until about a couple weeks ago. We're recording this on April 3rd here. And it was mid-March when I left New York. And so that was right when New York kind of shut down, when everything, all the restaurants closed. And I think what I saw there was this like densely packed city that was recognizing how dangerous it is to be densely packed when there's a pandemic and shutting down. And so, you know, from our team there and from friends there, it's just it's a odd dynamic to be in a city where so much of what makes the city is everything going on there, and then not having anything going on. And so it feels, you know, from talking to people there, it's a challenging time to be there. Certainly in San Francisco, where I live, you know, I'm hearing a very similar thing, that it's largely shut down. The virus has not impacted San Francisco as much as it has New York yet. But San Francisco was early on shutting down a lot of things, and out of an abundance of caution. And again, not as densely packed as New York, but certainly still kind of city scale and city packed. And I came to Phoenix, and it's interesting here because, well, there's certainly a shelter in place now as of this week. And, restaurants are shut down or, only doing delivery. A little bit more of a spread out city for a lot of parts of the city. And so the impact has not been felt quite as severely. There's also relatively few cases of the virus. So it's shelter in place like San Francisco and New York, but by virtue of it just being more spread out, I think it has less of an impact on people's daily lives. People are out running, biking, doing what they would normally do. It's just now people aren't going to the office as of this past week. Yeah, it's interesting. I think that the question for me is where will clear up first and kind of open back up? And is it going to be a place like San Francisco or New York that took really aggressive measures early on, is able to kind of contain the virus and opens up first while everyone else is kind of battling this longer tail of it? Or is it a place like Phoenix? The impact was never felt that severely in the first place, and they're able to kind of open the doors back up before the more dense cities do. So it's an interesting time and interesting to kind of see the contrast between these different places.
Yeah, the contrast between San Francisco and New York is really interesting to me because San Francisco definitely took it much more seriously, much sooner. I had a couple of friends who came to New York, and this is probably right about like second week in March or so. And one of them made a comment that basically was like, can't believe that no one here is even talking about this. Like Grand Central's packed, the subways are packed, like nobody is even aware of this. And at that point, I think San Francisco maybe hadn't completely shut down, but was like moving in that direction pretty aggressively. And then here in New York, it took another week and a half or so before people said, hey, maybe I shouldn't go, on the subway, or I shouldn't go stand around, hundreds of other people at once. And so, I don't know really why that is, but it just was a very distinct difference between the two cities for sure.
Yeah, no, I also don't know why that was. I have hypotheses that, San Francisco has a high concentration of people that are highly attuned to these sorts of kind of global events, and New York probably actually has a higher raw number of those people by virtue of being much bigger. But in terms of the concentration and density of people that are paying attention to potential risk factors and everything else, I think that you could make the argument that San Francisco has a higher density in the population. So the alarm started to sound, and people looked at that and said, this is concerning, and advocated for some action to be taken. And there's also an argument that at the time, obviously the virus was concentrated in China, and San Francisco is much closer, and for travel there. And so it could be too that there was just kind of more information flow or more obvious concern there coming between the West Coast and China, as opposed to China and New York.
Yeah, there's a component. One of Planta's friends jokingly said, "Coronavirus, I ride the J train every day. Like, if I'm not getting that." And there's a kind of truth in every good joke, which essentially is saying, look, New Yorkers, I think in general, kind of take this approach of like, "Nah, it ain't killed me yet, and so it's not going to happen now." Which in the face of a pandemic, it ends up being ignorance, right? But I think that's just a mentality difference, just as much as it was kind of an information flow as well.
Yeah.
And so, what's been the impact on like the fundraising environment for you guys, communication with investors? Like anytime you get in these, I was called kind of a time of uncertainty, I think a lot of things change and people focus on, are you physically going to the office or are you not? But it's also the way that you communicate with your customers, with the investors for you guys, both in the company and then also investors in the projects that you guys are helping fundraise for. Like, how's all of that changed?
Yeah, so it's a really interesting balance because, like I was saying, a lot of it for us is at some level business as usual. Let's keep running these sales. Let's keep rolling out this exchange. Let's keep marketing. And to the points you're making earlier, for a lot of our customers, they're saying, let's keep going. We're excited, and for the individuals in the platform, the investors and traders, they're saying, let's keep going. We believe in crypto, and there's this interesting dynamic I see sometimes in crypto among the kind of the true crypto community. where when crypto's up, when the market's up, everyone's shouting and cheering and saying, crypto's up, we're winning, which is great. And then when the market's down, everyone's looking at buying season. There's a sale on crypto right now. Now's the time to get in. And, I think this is kind of a unique attribute of crypto as an asset class, because so many of the people in the community are such idealists with such a long view of the space. It almost doesn't matter what's happening at the, in price levels. They're just going to have a different positive reaction. Either it's up, we're winning, or it's down, it's buying season. It's time to get in at a discount. And we're definitely seeing that from, users on our platform, that they just see this as a chance to get in when everyone else is dismissing the space. And I think you're certainly seeing that in the markets too, that after the big drop a few weeks ago in crypto prices, it's up. It's been kind of steadily rising, despite, all the chaos in the world, or perhaps because of all the chaos in the world. And so, for us, a lot of it's business as usual. So when we think about communicating with investors or fundraising, we don't have any plans to fundraise imminently. We're fortunate to be doing well in business and be running these sales and generating revenue. And we raised a great round last year, led by Polychain with Jack Dorsey and Collaborative Fund and a bunch of other people. And so we're in a good position. But the question, I think, when you're talking to investors that you already have in your company or the board is, okay, well, what's the downside scenario here? How bad could this be? And, because the assumption is if things are kind of neutral or good, then you're in good shape, obviously. But what's the worst case scenario? If this pandemic lasts a really long time, if it outlasts people's optimism about the space and willingness to believe in crypto as a hedge against this, if it really crushes the global economy at a level where crypto is just inevitably impacted as yet another asset, what happens then? And I think our view there is you got to be careful. In times like these, you don't want to be overspending. You don't want to be kind of burning cash left and right. But at the same time, you do want to be seizing opportunities that are in front of you. And I think 3-6 months down the road, we'll have a much more clear picture of where this is going and what's going to happen. Just where data is helpful. It feels like it's been years since this pandemic started, but we're talking about a couple months here, really, in the kind of United States and in the public eye. And so 3 months from now, we'll have a much more clear picture. And so a lot of the communications for us have been, we're staying the course, we're pushing forward. Let's figure out what we need to do to prepare for the worst case scenario here, and make sure that that doesn't cause issues.
Yeah, it is. It's one of these weird things. I was talking to somebody about it from a small business perspective, right? So let's say you're that local restaurant and the pandemic happens, there's a government mandated shutdown. And if you're that small business owner and they said, hey, it's a 2-week shutdown, you would make an analysis. Okay, how much cash do I have? What's my, cost? Could I survive for 2 weeks, continue to pay my staff? Obviously, we're going to open up in 2 weeks. And you could kind of make some educated decisions based on parameters that they gave you. What instead is happening is basically shut down your business and we don't know when it's going to open back up. And that's a whole different ballgame, because now there's no kind of true analysis of how much capital do I have, what my costs are, and if I ever will open back up, right? Because there's a lot of businesses that basically just going to run out of money, even if they fire 80% of their staff, et cetera. And so for you guys, obviously being a technology company that isn't, kind of susceptible to being shut down like those restaurants and other small businesses are, how have you thought about kind of the strength of the balance sheet, and kind of, are you preparing for kind of 6 months of this, 18 months of this, and just kind of talk me through the logic and the frameworks that you've used to kind of think through that?
Yeah, well, I'd actually point out one more big difference between a business like a restaurant and a business like a startup like us is cash on hand. So I saw a chart the other day about the average cash on hand, like how many days of operating expenses do different businesses and industries have. And it did not list tech startups, but it listed a whole bunch of more traditional businesses. And they ranged from, I think restaurants were under a month of operating expenses on hand on average. And the highest listed was like 46 days. I think it was real estate businesses have like on average 40 days of cash on hand. For all of these businesses, their cash on hand is, between, let's call it 10 days and 2 months generously. And that's just because of how these businesses work. They're cash flow businesses. Every month they're planning to make a little more than they spend, and keep going. But they've got ongoing costs even when they're shut down, like rent and other costs, and it dwindles really quickly. And startups, on the other hand, venture funded startups, I should say, carry with them a default assumption of having a lot of cash on hand. Because the assumption for venture funded startups is that most of them mostly lose money for a long time until maybe at some point they start making money. And I would say usually that's a curse, right? Usually most startups are burning money every month, burning, and then every year they have to go and raise again and stock up the war chest and then keep going. But in this case, it's official model. A startup that wasn't very close to dying has 6, 12, 18, 24 months of runway in the bank, because that's what they have to do anyway. And in this case, that's, it makes it less of a day-to-day decision where, a matter of 7 days makes an enormous difference, because you probably have 6 to 18 to 24 months of cash in the bank. Whereas for a restaurant, obviously 7 days, if you've got 15 in the bank is a life-changing amount. So that's one dynamic. For us, again, I think it's about preparing for the downside. We're in a comfortable cash position. We weren't going to raise anytime soon. And, our view, like I said, is, let's keep expenses down, let's not start ramping up spending really aggressively in these next few months. Keep expenses down. And then, in the next 3 months, reevaluate. Okay, where are we at right now? How long do we think this will last? Once this kind of initial shock dies down, does it look like we're in this for 18 months? In which case, what do we have to do? We have to go a little more money to make sure that we've got 24 or 30 months of runway if we think we're going to be in a real global recession for 18 months. How do we address that? But for the time being, we're looking at it and we're saying, this feels like a manageable position for us. And there's also, government assistance that startups can theoretically apply for, assuming it all gets sorted out, where you might get another month or two of runway by virtue of these government loans as they get processed. So that's another angle too. But yeah, for us, don't ramp up spending. Let's check in a couple months and see where we're at and push forward from there.
Yeah, it's really interesting too, I think, because the dynamic you described about like startups are kind of already in the mindset of like, we need runway because we either don't have revenue or we're losing money. And what I've seen a lot of them do, I felt like there was 1 week there where everyone turned around to every service provider they said, and they were just like, give us a discount, right?
Yeah,
and that was for everything from rent to legal fees. I mean, just everything. And it was almost like there was this playbook that venture investors kind of knew. They shared that information with the founders, and then founders went and executed on it. How has the communication with investors been? And kind of, are there specific lessons that you've learned? And you don't have to name who the investor is, but just things that they've been able to kind of share with you that you think other founders would benefit from understanding as you kind of continue going through this?
Yeah, I mean, the most obvious one, and I say obvious, but it's also something that I think people need to be reminded of in the startup community often, and investors sometimes say like, wow, yeah, is don't die, right? This is like, the most blindingly obvious piece of advice out there, but it's almost like people forget sometimes that startups are expected to be a windy, bumpy path. Exactly what you're doing today is probably not exactly what you'll be doing in 5 years. And if you're around in 5 or 10 years, it means you figured out something that works. So odds are what you need to do is stay alive, keep pushing forward, maintain your advantages, and not die. And I think, it's easy to say, go, growth at all costs. Startups are all about growth, which is all true. But the thing that kills startups is running out of, and really nothing else. And so I do think that's just a important thing to remember. On the more tactical level, there's all sorts of things you can do if you're in a position. You're seeing teams do this right now. Obviously, there've been some layoffs, which is really sad. I was talking to someone the other day who was talking about how they've encouraged people to offer kind of salary for equity swaps. So, can you let people take a reduction in salary and save some burn, and reward them with upside instead? And if you're in a position where you need to cut burn, that makes a ton of sense too. People are getting really creative, and at the same time, we've seen this before. Like, Sequoia sent out that letter a month ago or whenever that was, saying prepare for the worst, and everyone should read that, and should also go back and read the letter they sent in 2008 when that was happening, and think about those considerations. So so much of it depends on where the startup is, and cash position is, and what the market position is, what market you're in, whether you're in a pandemic resistant one like crypto, or you're a not pandemic resistant one like the hospitality tech space, and all of that matters. But number one, first and foremost, for all companies, do not die.
Yeah, it's crazy how the simplest advice is actually the most important. And to your point, people kind of lose sight of that. It also brings the question, did corporate executives forget that, right? When you kind of look, my favorite example is obviously the airlines, where they've spent 96% of free cash flow, which is a way to return value back to shareholders. But if you end up dying at the end of all of that, then you kind of violated rule number one. And so all that shareholder value, you basically wipe it all out at the end. Seems like it's kind of a cliff that you're just accelerating towards to some degree.
Yeah, I mean, I have a lot of thoughts on the airlines. I think it's an issue of incentives, right? So first of all, there is an effective that a belief that maybe no matter how badly they mess up, they will not be dead because they will be saved, right? And if you know that that's backstopping you, or probably backstopping you, that's going to wildly change your behavior, because you can do whatever you want, and that you'll be okay, or you think that you'll probably be okay. But I think more importantly than that, there's a question of incentives for the people that are making the decisions. So if you're a startup founder, you most likely own a big chunk of your company, and if you're making those decisions, your net worth and your success is tied up in the success of the company. That's like, the company dies, that equity that you have is worth nothing. So, you've got this really, and most likely that's a meaningful thing for you. For a lot of these airline executives, they don't own a big one. And in fact, most of their cash, most of their compensation has been out regularly. And their view, you could argue from an incentives perspective, is when the times are good, get as much as you can, right? Because what they do is they effectively go and get stock-based compensation out of the company, and then conduct these share buybacks with free cash flow and increase the value of their ownership when times are good. And you can argue that there's an incentive there to just get as much as you can. That's actually, if you want to make as much money as possible as an airline executive, the smartest thing to do is get massive amounts of stock-based compensation for the company doing well, make the company do well by spending all of its money on stock buybacks, and just juice your compensation. And then things will blow up at some point, but you will have made your penny, when the times are good, and you can walk away or push through. And so it speaks to me more about less about people forgetting, and more about just the power of incentives. That as a startup founder, you have very different incentives than an airline executive. And there's kind of a beauty in how startups are structured for that reason, that you're in, and you need the thing to work for you to be successful.
Yeah, the really smart executives all left at the end of 2019 or kind of January 2020, right? That the ones who kind of got out and aren't, being implicated in a lot of this. And we saw a lot of executives leave, but it makes you question the ones who kind of stuck around if they just mistimed it. But now they're kind of stuck in the sand, if you will.
Yeah, well, I mean, someone's got to be in those seats, and at some point when a bunch of others leave, you might be saying, well, maybe it won't be as bad as they all thought, and now here's my chance to, you know, yeah, they may have gotten it wrong.
For sure. So what's at CoinList? What's your pitch to projects as they're looking to fundraise and stuff? Kind of what's the pitch now? And for all the ones that are listening, what can you kind of explain to them?
Yeah, the pitch at a very high level is very simple. CoinList is where the best projects run their token sales. And why do they do that? Because one, we do a really good job for them, and we handle all of the work that we do really, really well. Two, we do a lot of work. We've built up a ton of systems over the past 2.5 years to support a successful token sale. And we've got a big community of people on the platform that see CoinList as a really trusted place, and a place where the best projects run their token sales. And so all of those factors together increase the success of an already great project that is trying to run an effective sale. Some of the stuff that we do for them includes obviously handling compliance, due diligence on the investors. So KYC, AML, accreditation. We built out these incredibly robust systems to support people all over the world and go through those processes. We help sometimes with marketing for certain sales and are able to help bring our community to bear to support the project. And that's really exciting. We help with analytics on the investors coming in and reporting of what's going on and who's coming in and how to reach out to those people, how to increase the success of the offering. We help with the distribution and getting the tokens out to those purchasers at the end of the day. And so for us, it's a really full stack approach. We want to abstract away all the stuff that teams shouldn't be spending their time on because they're only going to do this once or twice, and do it for them and let them focus on building a great community and building a great project and a great go-to-market strategy. For us, every great project that works with us and that we're fortunate to partner with makes the pitch even stronger for the next one. And we see that over and over again. So teams usually come to us and they say, we're interested, how can we work together? And if they're great, we get really fired up and we do everything in our power to make them successful, both in the scope of those services that I was just talking about, but also informally figuring out ways to help them and pour more gas in the fire.
Got it. And are there specific types of projects that you feel like are best positioned to leverage what you guys have built? Or is there anything specific in the criteria you look for or just structure or anything like that?
We're pretty flexible. I think the biggest piece that ends up disqualifying projects from working with us, if they otherwise have a great team and an interesting product and a strong go-to-market and all of that, is if we don't see the case for them needing to have a token. And those are kind of the toughest conversations, where when we sit down with a team, they're, again, fantastic team, great go-to-market, really compelling product, like all these signs are pointing in the right direction. And we look and we just say, we just don't think this needs a token. And we think it could be done much more effectively without a token, because we don't think every company and every single application does need its own token. And those are the ones that we say sometimes, this is a tough no for us, but we just can't pull the trigger on this. So the ones that we're most excited about are the ones where there's a really compelling use case for a token, and decentralization and blockchain technology are going to make a big difference for the success of the project. And those are the ones we really want to support. So a lot of time that ends up being layer one projects. So we've worked with a bunch of great layer one projects, but also application level ones then can make a compelling case for using a token in their ecosystem.
Got it. And so where can projects that would be interested in learning more about the fundraising process go? And then also, what about individuals on the exchange side as they kind of are waiting for that to come out?
Yeah. So if you Well, anyone is welcome to reach out to team@coinlist.co at any time. If you're a project looking to engage, that's probably the best way to do it, and we'll get right back to you and get a conversation going, and talk about how we could help and learn more about what you're doing. If you're a project and you're reaching out to team@coinlist.co, I would say definitely include some information. Let us know what you're up to, and we'll dig in and do our research. If you are a user looking to trade or just participate, coinlist.co/trade. You can sign up. Right now, we are just starting to roll this out. So it's, first of all, from an asset perspective. So it's Bitcoin, Ethereum, Algorand, USDC, and then US dollars on an off ramp if you want to pay with your bank account. And it's also limited from a UI perspective. So it's a really simple kind of click and trade interface where you say, I want to buy 1 Bitcoin. It shows you a price, you click OK and you buy it. But in the next couple of months, we'll be rolling out both more assets, which we're really excited about, and also kind of a pro level interface with a real order book and a more advanced trading view that you can use if you are a more sophisticated trader. So all of that's coming in the next couple of months.
That's awesome. No, I love it. Last question for you before we wrap up. Any cool quarantine plans? Anything that you got in the next couple of weeks that you think is cool?
I have been using this. Nothing particularly cool, although I've got a friend hosting a virtual DJ set tonight, and there's lots of good virtual parties happening. I've been using this as a chance to reset a little bit. I've found that without having 60-minute in-person meetings all day, I've got more time to, catch up with people, dig in on kind of deep work and things that I've been putting off for a long time, exercise, all the good stuff in life. And so frankly, I think, while certainly acknowledging all the terrible stuff happening around the world, having a chance to reset a little bit and, maybe not try and do crazy interesting things all the time, and just take it a little more slowly for a few weeks has been a really pleasant change of gears. And we'll see how I feel longer it lasts, but for the time being, a reset's a good thing.
Yeah, it's one of these things where I jokingly say, like, the world's been forced to do remote work, and I wonder how many people are going to be excited about going back into an office, right? We talked about some of like the social benefits, but I think actually a lot of people are like, wait a minute, I like this way better. I like not having meetings. I like being able to go work out. I like being able to, not go on my hour commute both ways every day. Like all of these components that just, it would have been hard to kind of experience cold turkey without something like this happening. And so that may be some of the benefit of all of this, coming out the other side of it.
I think you're right. I'm very sensitive to the time. So I think much everyone is going to love a week of remote work. I think fewer people are going to love a month of remote work, and I think fewer still are going to love 6 months of remote work. And so seeing how that all shakes out and how people's perspectives change depending on how long we're in this situation is something else to looking out for. But I agree, everyone benefits from a little time at home.
Absolutely. All right, Andy, listen, I appreciate you jumping on and doing this. Anyone that is interested, go check out coinlist.co, and we'll have to do it again as you guys keep progressing here and eventually get that trading platform up.
Sounds like a plan. Good luck and stay safe out there.
Yeah, you as well.